So how do we get rid of inflation? And as I mentioned, it would be nice if there were, a way to just wish it away, but there isn't.
The Fed delivered its third straight 75 basis point interest hike this week. Here are 5 ways that might affect Americans. Number 1. Unemployment will rise, with inflation still high. Unemployment is currently very low at 3.7%, but it could rise to 4.4% by the end of next year. In the last 3 recessions, the jobless rate peaked at 14.7%, 9.5%, and 5.5%. None of those were preceded by inflation anywhere as high as today. Number 2. Wage growth will slow, with fewer job openings. Wages grew at a 5.2% annual rate in August, with lowest paid workers seeing the biggest bump. But policymakers are trying to tamp it down. They say the pace of growth may lead to a spiral of higher inflation. Number 3. Saving rates will rise, but so will rates on consumer loans. Households will get a bump in the interest rate on savings accounts, but finance companies will be raising their rates on most consumer and auto loans too. Number 4. Buying a home will be less affordable while rents continue to rise. The housing market is where the rate hikes have hit the hardest and fastest. Mortgage rates doubled in just over 8 months. The current average is 6.25% for a 30-year fixed-rate mortgage. Meanwhile, rental prices climbed an average of 6.4% in August from the previous year.
Food has definitely gone up a lot. I just bought groceries, and usually what happens to be like about $130 was like $200.
And number 5, there's not much the Fed can do about gas and food prices. It's the everyday prices that Americans perhaps care about most, but they're beyond the Fed's reach. Gas prices, which spiked in the U.S. due to the war in Ukraine, have been on 11 straight weeks of decline. But the war, as well as severe droughts in Europe and China, will keep food prices high in America.